doing business in Africa. You can't afford to be without Africa Investor.
Good day and welcome on behalf of Bloomberg, Africa Investor and the African Union's development agencies, Continental Business Network, the CBN, to the first African Asset Owners series on co-investment partnerships. My name is Hubert Danso. I'm the CEO and Chairman of Africa Investor, the CBN and the African Sovereign Wealth and Pension Fund Leaders Forum. And I'm going to be chairing the opening scene setting panel on delivering on Agenda 2063 and the 5% infrastructure investment agenda. This is the first event of a three-part series with Bloomberg for 2020, which will feature two panels. The panels will be focused on the African Union's 5% infrastructure investment agenda, which is our African Asset Owners Partnership Compact with African heads of state to increase investment allocations to infrastructure as an investable asset class from a current sort of mid-low of around 1% to at least 5% of assets under management. And this will be done within a new framework called an Institutional Investor Public Partnership, IIPP, as used in Canada and Australia and elsewhere successfully around the world. Agenda 2063, as many of you know, is Africa's equivalent and complement to the UN Sustainable Development Goals. As I mentioned, there are going to be two panels. So the second panel for today will cover global co-investment partnerships in support of the 5% agenda. So I'm going to be chairing the first African Asset Owners Perspective panel, and Manus Cranney, who is the co-anchor from Bloomberg, will chair the second Global Asset Owners Partnerships panel. Today's theme represents the outcome of the CBN's and the African Sovereign Wealth and Pension Fund Leaders Forum's COVID-19's consultative roundtable series, which was investigating the role and response of African institutional investors to the COVID-19 pandemic. That process led to this particular series and us launching the outcomes report here today, the African Asset Owners Investment Partnerships in support of Agenda 2063, the African Investment Partnerships We Want report. This report is our roadmap, our economic roadmap on future-proofing Africa through asset owner investment partnerships to build resilience for achieving Agenda 2063 against the backdrop of COVID-19. The report, put together in collaboration with Rescura, Africa Investor Capital, is a very rich feast of over 200 asset owner investment partnership recommendations, 100 future-proofing initiatives, and over 500 investment products that are really bringing together what it was basically being described now as the African Asset Owners Statement of Interdependence, our real partnership now with the public sector. This seminal report symbolizes the African investment community's choices in our voices and represents our unwavering commitment and support to Agenda 2063, the 5% infrastructure investment agenda, and the $3.2 trillion African continental free trade area. And joining me to provide insights on African asset owner investment partnerships, we have elite and distinguished African institutional investment leaders, namely Mr. Uche Orji, who is the CEO of the Nigerian Sovereign Investment Authority. We have Mr. Sandeep Richaria, who is the chairman of the Kenyan Pension Fund Investment Consortium. We have Ayman Suleiman, who is the chief executive officer of the Sovereign Fund of Egypt. We have Babacar Njing, who is the CIO, the chief investment officer of FONSIS, the Senegalese Sovereign Wealth Fund. And we have Mr. Ndabe Nkize, who is the chief investment officer of Erscom Pension and Provident Fund. So to get us started, I'm going to ask each of my fellow panelists to share their views on why, in their views, in our words, why is African asset owner leadership and co-investment through the 5% agenda such a high priority for your institutions and the continent? And please explain just a little bit, very succinctly, how you are approaching institutional investor public partnerships with policymakers and regulators. So to get us going, I'm going to call on you, Uche, please, for your comments. Over to you.
Thank you very much, and I hope you can hear me clearly. I will speak to three things that define how we look at co-ownership and co-investments in terms of public assets. The first is, it is very clear in the mandate of the NSIA that this is one of the key objectives that we shall pursue. It's actually in some way stated in the enabling legislation of the Nigeria Sovereign Investment Authority. Number two, we have a fund, a clearly ring-fenced fund that holds currently 50% of our assets. It's called the Nigeria Infrastructure Fund, which was created as a vehicle, not just for direct investments into infrastructure, but for co-investments. So there's a background to the desire to do this in our country. And this is a recognition of the fact that we do not have enough resources as a country to meet our infrastructure needs. Now, how we approach it at the NSIA is through threefold. The first is through direct investments in infrastructure. The second is co-investment funds being created. And in third, we actually have assets that we're developing that people can invest into directly. So I'll speak specifically to the co-investment funds. We created two co-investment funds about 4 years ago. The only one that's been really running and successful has been an agriculture co-investment fund, which is invested in the value chain of agriculture as well as infrastructure for agriculture. This was done with a firm called UFF, which is an investee company of Old Mutual. We have a few others that we have in the works that is ongoing. The second one that we've done successfully is the creation of an entity, a financial services entity that provides infrastructure guarantees with PIDG, the UK, as well as the African Finance Corporation, is our co-investors into this vehicle. So we have this opportunity to create co-investment funds that actually has 50-50 ownership with or a third, depending on what the structure of the fund is, that goes after public assets. Now, in terms of some of the public assets we have gone after, which we've invested in, we've created something called the PIDF, which is a fund that actually has taken on a power project, 3 road projects, and is developing those projects now. And here we are inviting investors to come into it. So for us, it is a clear statement of our mandate, and it's also a recognition of the needs of our country and the limitation in our funding base. But we actually also position this as investable opportunities that people can actually make money. And one of the roles we play as the NSI is to clear any sort of legal hurdle or any kind of issue with interacting with government in ensuring that the funding structure and the legal contracts are well adhered to. So in the role that we play, we see ourselves as that conduit and also the honest broker and also a partner for anybody investing in Africa. The areas we have targeted for co-investment are, of course, we've spoken about agriculture, there's toll roads, there's power, there's healthcare, and there's gas industrialization. These are the top 5 areas at the moment that we are targeting co-investments. We have an objective that for every $1 we invest, we target 3 times that from external partners. And those external partners also include internally the pension funds in our country as well as foreign co-investors. So for us, this is really important. So let's stop here.
Fantastic. Thank you very much, Uche. I think one of the key drivers behind the 5% agenda, when we both look within and outside the continent, is really being able to demonstrate that we are working together as a constituency and as the African institutional investment community. That's both at a country level as well as at a continental level. So Sandeep, I'm going to turn to you now to give us your response to that particular question, and just tell us how the pension fund community are organizing themselves to support the 5% agenda and pursue institutional investor public partnerships in your market. Over to you, Sandeep.
Thank you, Hubert. In the Kenya Pension Fund Investment Consortium, and each of the 14 members who currently participate in this consortium fully embrace and are wholly committed to the 5% agenda. Indeed, each of the 14 funds with an asset base of more than $2.5 billion have committed to investing in infrastructure at 5% over the next 5 years. To this end, we are getting technical expertise from the World Bank to create an infrastructure fund as well as a platform. And we are currently in the process of selecting an infrastructure manager. We are in active engagement with the public-private partnership unit in Kenya at the National Treasury. And in Kenya, there's a fairly decent pipeline of more than 80 projects in need of financing across various sectors. I'm also very delighted that last year we facilitated a delegation of US pension funds and asset managers to Kenya. And in the last 2 weeks, we have entered into a memorandum of understanding with MIDA advisors. And our aim is that over the next 3 years to mobilize more than $250 million of investment from Kenyan and US pension funds into infrastructure in Africa in 3 priority areas. The areas that we're looking at are core infrastructure to support agriculture and transport, as well as social infrastructure. And we've got a fairly decent opportunity platform as we speak. And we're also looking at the government of Kenya's affordable housing agenda and supporting housing investment as well as related manufacturing.
Fantastic. Thank you, Sandeep. I'm also glad to note that, as the asset owner community on the continent, we ensure that we don't sort of say, well, Africa is sub-Saharan or which part of Africa is included in Africa. We are the entire continent. And I'm really glad to have North Africa as part of Africa. So, Eamon, this is you and your perspectives from Egypt and North America, North Africa and the rest of Africa. So please share your responses and views on, as a newly established and dynamic sovereign wealth fund, please share your perspectives on this same question.
Thank you. I think as the most recent comer to this field and joining the ranks of the sovereign funds of the rest of the world, we've identified infrastructure across Africa as a key investment sector for us, and Egypt is an economy that is growing. It is coming back from a recovery, economic turmoil, and now it is directing significant attention towards its ties to Africa, its ties to the rest of the region, and of course the challenge that the COVID had presented to us made us rethink and reshuffle our priorities, and accordingly we are now much more focused. I can say as much as 70% of our pipeline is driven by infrastructure investments. And we are, as a partner and as a co-investor in the infrastructure space, we are carrying that flagship of the partnership. We're not only promoting projects, but we are also investing projects that we are carrying an equal amount of risk into. The government has started, the government of Egypt over the past 5 years started a reform program, economic reform program, that also included significant government spend to regain economic activity and to boost economic activity. But alongside, there were parallel tracks that are also more engaging to investors, from eliminating any restrictions on repatriation of capital. So capital restrictions were all lifted entirely. The stabilization of the currency, a due and fair pricing of the currency with a significant price adjustment back in 2016, late 2016. So with those, the fair pricing mechanism is also part of what drives our appetite to invest. And we are carrying the flagship of co-investors. So as Hubert kindly put it, and as my colleagues are putting it, as Team Africa, we are saying we are now asset owners that are investing in the space, and we're not only promoting products. And on a more granular level, of course, the North Africa, if you excuse me, Hubert, on that front, North Africa has a significant advantage because of the amount of deserts that are there, because of the sunshine and the climate. We have developed a significant advantage in the renewable space. Now Egypt claims the largest solar farm on the planet, and we hope we hang on to that position for as long as we could. But it is a compelling opportunity for investment and to create investable products in that space. We're also aggressively going into the water desalination, because of the shortage of water and because of food security issues. All of those are opening up significant opportunities for co-investment alongside investors. So we also have our own public-private partnership model, and we're standardizing those products to become mainstream co-investable opportunities in the infrastructure space, be it in the water desal, water treatment, energy, renewable capacity, and there's also some monetization programs that are coming to the market, probably landmark size-wise compared to the offerings in that space. So in that context, linking to ourselves to Africa, creating those bridges across from infrastructure bridges, railway linkage, Cape Town to Cairo, there is that ambitious project, linkages on the power transmission link. So there are also so many projects that are out there that are being offered, negotiated, and we are, as a sovereign fund, investing alongside our partners in that space. So that enhances our ability to attract. Yeah.
Thank you, Ayman, and that's really the genius and the great leadership that our heads of state at the African Union and many of you within our asset owner community have really brought to the 5% agenda. There's the Program for Infrastructure Development for Africa. There's a number of projects within the Presidential Infrastructure Champions Initiative. And the real essence of this is the ability for us as asset owners to be able to co-design and develop these particular transactions so that they are much more aligned with our risk-adjusted returns criteria and our investment policy statement. So this whole institutional investor public partnership instrument that's at the heart of the 5% agenda is a very critical motivator on the one hand. And then on the other, as you say, we don't need to compete within the continent, because if you in North Africa have one advantage and someone else in another part of the continent has another advantage, we can co-invest with and alongside each other and get access to all of those opportunities on the continent. So thank you for making those points. When we started this initiative, the Senegalese sovereign fund, FONSIS, were very much involved in the institutional investor public partnership component, the actual policy direction and the sort of framework around structuring the transactions. And it was quite curious and interesting, because as we evolved the model, they were already working towards a very similar model. We had just conceptualized it as the institutional investor public partnership, because we looked at the Australian model, where pension funds in Australia worked with the governments and the government, and basically said, look, we are long-term equity investors, so the classical PPP model might not work so adequately for us. Let's call it pensions public partnership. So because we have more than pension funds amongst our institutional investment community, coined it institutional investor public partnership. So Babacar, I'd like you to just share some views about the 5% agenda and how you view the institutional investor public partnership model. Over to you, Babacar.
Thank you very much, Hubert. Indeed, CONSIS is a strategic development fund, so it has been created by law in 2012 with the clear mandate to crowd in the country massive private investment in the strategic sectors in order to catalyze the country transformation momentum. And we have also a private equity activity to fund the high potential SMEs. But regarding the public-private partnership, I can say that it is in some way in our DNA, because what we want to see ourselves as an inflection point between the private investors or institutional investors and the public and the government. So we see infrastructure, we are very sensitive to the infrastructure issues, to the funding infrastructure, because in our mandate, we try to innovate in this funding scheme for infrastructure in order to make it the burden more affordable for the government. But in our investment, we try to capitalize on our, let's say, privileged position to try to structure projects, PPP projects especially, in a way to ensure not only the social impact, but also their profitability. And for instance, what we are doing for now is, for the last 5 years, we have been heavily involved in energy, in transportation, in water production, and also in healthcare facilities, with each time trying to have to crowd in private investments and to have the government to de-risk, if there need be, the investment. And for the coming 5 years, we will put the focus on the new technologies such as desalination and also on, let's say, telecommunication. Because for us, telecommunication, most of the time when you talk about infrastructure, you talk about classical infrastructure, but telecommunications and healthcare facilities are key in order actually to help high potential sectors to transform their potential into engines for growth and job creation. For instance, what you are trying to do now, which is one of our challenges, is to replicate the models that we have seen in the energy sector with the PPP in the telecommunication, for instance, by mutualizing all investment in the hardware and also making it available and accessible for any SME who has value-added services to provide. And this is in a nutshell what we are trying to do. And also we are really, we think that now is the time of Africa to lead maybe the world with new models of funding infrastructure. And this new model can supersede the classical models based on public debt backed by sovereign guarantee. And just to finish, if you look at actually currently our portfolio in Francis, we have roughly 65% of our investment in infrastructure. So somehow we are fully committed with the 5% agenda, and for now, we are outperforming these objectives of 5% investment agenda. Thank you.
Thank you very much, Babacar. And as you rightfully point out, the 5% agenda is at least. So we are really going to be looking to exceed that allocation where and however possible. I think one institution in South Africa, the Eskom Provident Pension Fund, is really one of the front runners on the continent as far as that is concerned. I think I'm going to call now on Ndabe. I think South Africa is quite unique in some respects because it actually has a piece of legislation called Regulation 28, which actually encourages and provides a specific framework and allocation for institutional investors within South Africa to be able to invest in the rest of the continent. So over to you, Ndabe.
Thank you. I think in responding to the question why this matters to our organization, the Eskom Pension and Provident Fund, it really boils down to the attractiveness of the asset class. The returns are very good. They are high, they are predictable, they are stable. More importantly, they can contribute to job creating growth. They also give a wide scope to drive impact investing. So the question is, why has the allocation to infrastructure and real assets in general been low? And we believe that the lack of understanding of this asset class amongst smaller pension funds and asset owners has probably, and also maybe the familiarity of asset consultants with this asset class has resulted in a low allocation to an asset class that is deserving of larger allocation. If we look at why then we would want to co-invest with other partners, we have been doing this for a long time. And recently we were allocating to international real assets and private equity. So not only just investing in Africa, but also investing internationally, because we just believe it's the way to invest. And when we're going internationally, we want to look for those managers or those assets where we can co-invest with local investors who have local knowledge, where those host countries would have a skin in the game. And with people who also think like us, who have the same risk and return objectives and constraints, who need high ethical standards and governance. and also whose legislation we can understand. We believe that Africa already has that, and you can go to different parts of the continent. Certainly speaking from where I come, we have very good legislation, very good regulatory bodies, the Financial Sector Conduct Authority, and have been doing this for a long time. We have open-ended infrastructure funds that have been running since 1999 with very strong returns. We also have opportunities like the Renewable Energy IPP, Independent Power Producing Program, which has been very successful and probably was one of the best in the world and has a backstop to the National Treasury. We've been doing that for a long time. We've got bid windows 1, 2, 3, all the way to 4, and are now in a stage where we are refinancing that debt. So not only can we invest in on the equity tranche, but there's going to be an opportunity to actually invest in private debt that's going to be very, very competitive and stable. There's an opportunity to invest in a port, a dry port. Now these are the smorgasbord of opportunities that you typically find in other international countries, and we're saying that Africa does have that opportunity. For example, the Durban Harbour is one of the busiest in Africa, probably the busiest or second busiest, and there's a need to expand it, not just on the seaside, but also on the land side. So there are proposals to actually have a dry port with lots of money to invest and tremendous interest. It's going to be foolhardy to expect international investors to come and invest when the local pension funds are not investing. And our belief is that not only should we be finding South African pension funds investing, but let's also get African and other international pension funds. In the same way, when we are seeing projects in Kenya or in Nigeria or in Egypt, we should also be doing that intra-African trade, as well as crowding in international institutional investors. This is not a pipe dream. It's already been happening. We've already done it in private equity. For example, we've put money alongside international pension funds, especially the American pension funds, into a fund called DPI. We know, without having to name names, but we've been able to do that, and that gives a lot of comfort to those international pension funds to say that if the local ones, or maybe African pension funds, also believe in these opportunities, we too can do the same thing. So I believe it's definitely a time, is an idea whose time has come, and I think there's a lot of legislation, good asset managers, and very respectable asset owners that one can invest alongside.
Excellent. Well, thank you very much, Ndabe, for giving some practical examples of how the 5% agenda and co-investments are being applied as enabling African asset owners to actually act as the anchors in the same way that other asset owners do in other parts of the world. I think the second important and interesting component of this particular partnership is the way that the heads of state have really worked with us, the way that the African Union Development Agency have really provided a lot of technical and intermediation support, and recognize that the way that each of you have spoken, the way that our community approaches facilitating co-investments is a very valuable asset for the continent. The reality is, I think we, as peers, are more inclined to understand investing in Nigeria if the Nigerian Sovereign Investment Authority package and present that particular proposition and talk to the risks, talk to how that transaction will be managed, and on top of it have skin in the game. That's a very powerful force for our governments. And then conversely, our ability as the African asset owners to work with our heads of state, our ministers of finance, central bank governors, and other policymakers on transactions to ensure that we get the right structure is a real departure from the perception around how to manage the risks of investing in Africa on the one hand and infrastructure on the other. But that being said, we all recognize that we're not operating in isolation. that we're all a very integral part of the international investment community. And within that international investment community, everyone is seeking co-investment partners. So I'd now like to just turn with a sort of parting shot question, which is, I'd like to get each of your views on what's Africa's global co-investment pitch in today's increasingly complex and competitive environment for capital and partnerships. And I'm going to start with you on this one, Sandeep, and then go to Ayman, Babakar, Uche, and end with Ndabe.
Thanks, Stuart. I believe that the perception of the African infrastructure paradox, in which very few investment projects make it even beyond feasibility, that narrative is changing. There's a lot of exciting, interesting work happening. If I speak for Kenya, I talked about the 80 projects on our PPP pipeline. There's things that we're looking at currently as KEPFIC in terms of investing in a 140 megawatt geothermal plant. There's opportunities in investing in our infrastructure in our main referral hospital, student accommodation. So I feel that African pension funds and through initiatives like KEPFIC, we are taking the leadership. We believe that we can be really good anchor investors on the continent, and in that way catalyze global investors. I believe we lend credibility, as was said earlier. We bring a perspective on measuring the risk parameters, and I believe this is the time for Africa. There's a lot happening, and through the work that's happening with Kenyan pension funds, South African funds, US pension funds, we're looking to see this collaboration and lots of win-win happening. Thanks.
Thank you. Uche, competing for capital and co-investment partnerships internationally, what's your pitch? What's Africa's investment pitch?
Investment pitch is very simple. Number one is there's probably a lot more returns to be earned for doing the most basic things, quite frankly, in Africa. And I'm speaking to industries, I'm speaking to logistics, I'm speaking to gas and utilization, I'm speaking to conversion of natural resources into value-added goods. So that, if you had to do a time shift, we're still many decades behind the rest of the world, and I think the reality is that opportunities do exist. The second thing is that, as much as people struggle to see the real consumption appetite, there is a lot that is still to be done, and I can pick so many sectors to work on. Mm-hmm. But when I also think about the co-investment and co-trade opportunity within Africa, and I know you talked about the Continental Free Trade Agreement, the intra-Africa trade is 16% compared to 64% in Europe. There's a lot to be done. There's a lot that can be done, and it just takes a few basic infrastructure being put in place and areas of investment being made for this to be unlocked. There is a reason why some of these markets exist as market voids. We're called emerging markets because these voids will exist, but we're working very hard to fill out these voids. A lot of the voids, one of the areas we're filling out is the creation of investment partners of choice. Sovereign wealth funds in Africa, maybe outside of South Africa, didn't exist in the rest of sub-Saharan Africa 15 years ago. Well, here we are today, significant pools of capital, maybe not as much as other places, but we can co-invest. We can represent that sophisticated end of the co-investment platform of the government. That changes things in a very powerful way. So I think that the fact that you can come in, and even if the NSI wasn't able to put up 10, 15% of that brings a lot of protection. Some of the risks you thought about when you think about Africa 10, 15 years ago don't exist as much anymore as they may have existed then. So therein lies opportunity. The second thing is the fact that we are out here pitching and saying, come with us, and it's easier to walk along anybody, one of these, some of us here on the platform, coming to our home countries, than it is for you to just do it by yourself. So there is significant value, but the fact is that the time has come and that we have put things in place that make it easy for anybody looking to take advantage of these opportunities to work with us.
Fantastic, thank you, and absolutely right, Uche. But of course, we're operating in the midst of the pandemic and COVID-19. We know that there are going to be future pandemics every 4 to 6 years. So the ability to align with Agenda 2063 from the African Union, which is, as I mentioned before, allied and complementary to the Sustainable Development Goals, also creates a lot of opportunity to create a nexus between all of the compliant ESG principles and in both continental and domestic pools of capital that are really looking to support infrastructure, ESG compliant infrastructure, and get a very big tick in that we are supporting the SDGs and the asset class box. And as I mentioned, COVID-19, I'm going to go to Ndabe now because he talked about a number of sort of specific port type opportunities, dry ports, and that, in that point lies part of the opportunity. As we see, COVID-19 has created this multipolar world at a time the continent, through the African Continental Free Trade Area, is really going to become effectively the largest free trade area since the establishment of the World Trade Organization. So Ndabe, I'd really welcome your views on this particular question. Thank you very much.
I think it's a very important question. What COVID-19 has taught us is that we need to be global in our thinking. We might act local, but let's be global in our thinking. And other times we need to also be global in our actions. What we refuse to do in some other area of the globe might come back to bite us later on. So when we can help improve the living standards of Africa, then those economies will have enough money to be able to improve their own healthcare, education, and be more sustainable, and therefore have fewer pandemics or have an improved ability to be able to handle and control those pandemics. We believe that investment in infrastructure is going to drive that economic recovery. So that's why when we're going into infrastructure, we want to build back better, be able to put money into those things that are contractual, but where we have to build something and employ people and drive that economic recovery. So things like dry ports, things like logistics warehouses, things like healthcare. We believe that those things are going to give you not only the necessary positive social impact, but are also going to be driving returns. And it is a good thing when you're doing that and your returns are high and your risk is low. And why is the risk low in Africa? Because we take belt and braces. We cannot get by with anything else. We have to make sure that we have a World Bank or an IFC and giving political insurance and all those kind of things, so that the loss ratios in Africa infrastructure have been lower than other parts of the world. And that's a fact, because of the belts and braces approach. So you are not throwing your cash away when you are investing in Africa. You are getting an appropriate return and risk reward, and at the same time driving impact in an area where it's definitely needed.
Thank you very much, Ndabe. And I know that Babacar in Senegal understands engaging and working with the international asset owner community very well. And I know that there have been a number of very successful partnerships with platforms that are highly concentrated and backed by European or North American pension funds. So Babacar, over to you.
Thank you. But before that, I would like to say that admittedly, investing in Africa most of the time is depicted as something exotic or risky or humanitarian. But the reality is on the ground, Africa is among the very rare regions in the world where you have the combination of strong fundamentals for long-term investment. You have strong growth prospects, you have booming middle class, you have high rate of return, and you have also, as say Ndabe, our government cannot afford to default on their sovereign commitments due to the fact that the consequences would be terrible. So in a nutshell, you have the fundamentals, you have opportunity, and now in the world you are talking about impact investment. And when we invest in Africa, even in basic infrastructure, the impact is obvious on millions of lives. So our pitch here in France is what you do is we have identified the fact that most of the time, investors who are willing to invest abroad, they have two main expectations. First, they want to have bankable projects. And second, they want to have the right local partner. And we, Francis, what we do is we try to address these two expectations. We provide bankable projects because we have set up a preparation fund, which is a fund that we use, it's seed money, to take in charge all feasibility studies required for a private or institutional investor to be able to start his decision process, investment decision process. And number two, we position ourselves as a co-investor. And by doing so, not only you are proposing to co-invest in equity or debt, but you are also able to make change happen on the ground. Most of the time, we, on all of our projects, have advised the government to make some reforms at the sectorial level. And this reform has proven to be critical in order to ensure the attractivity of the project, especially the infrastructure project. For instance, in our very first solar power plant in Senegal in 2014, Francis was championing this project, and it was mandatory for us to make some modification in the energy regulatory framework in order to make solar power plants bankable project in the country. We have done that, and since then, 10 more projects has followed. And currently also we are working on water. We say that in energy, PPP has proven to be a very effective tool to attract private investment in the energy sector. And this has helped our country to address the issue of shortages we experienced 3 or 5 years ago. What we are trying to do is to replicate such a model in the water production with the IWP, independent water producer. Because regarding the growing of the population, only public budget cannot afford to achieve all investment. We need to have enough water for everybody. Thank you.
Fantastic. Thank you very much, Babacar. And of course, you know, all of these are just real practical illustrations of how our investing and our investment partnerships are aligned to the Sustainable Development Goals, Agenda 2063, but never at any single point moving away from the ability to be able to deliver those competitive, risk-adjusted returns. So to close this out, I'm just now going to move to Eamon for your views. Thank you.
Yes. Thank you, Hubert. I think my colleagues have already covered all of those answers. The infrastructure as an asset class particularly that we found very interesting is next to the fact that these are emerging markets, these are markets that are trying to be as attractive and competitive as possible. So we offer the highest risk-adjusted return possible as an emerging market. So our collective offerings in that space, while they are ESG enhancing, score enhancing, any institutional investor that comes in, invest in Africa, invest in our markets, will be enhancing their ESG score as well, because we can only offer those products as ESG compliant products. And this is how the mainstream investment domain has qualified investments. This is where we are attractive. This is where we are competitive, and of course the infrastructure is the next best-in-class category right after sovereign debt, because of the fact that it attracts sovereign guarantee. So it is also a very attractive asset class as investors move up the risk-adjusted yield curve.
Thank you very much, Eamon. What a great way to end out this particular panel. I mean, you're dealing with a monopolistic asset delivering probably much more competitive. You know, you're looking at double-digit returns relative to OECD sort of mid-single-digit returns. So definitely a compelling asset class, and of course, a lot of developmental dividends as well as commercial dividends. So that's a great instrument, and thank you very much, everybody, for sharing your insights on this particular panel. So I'm now going to hand over to Manus Krani, who I'm from Bloomberg, to facilitate the next panel on the global investors' response to the 5% agenda. Over to you, Manus.
Hubert, thank you very much for that. Warm welcome to everybody wherever you're tuning in from. I'm in Dubai, but we bring you a global conversation, as Hubert has just sparked off. The gathering that I bring to you is building a resilient co-investment set of partnerships. It's called the Global Win-Win. Who better to answer that than the people who deploy capital in Africa and who congregate that capital. Angela Miller-May is the Chief Investment Officer at the Chicago Teachers Pension Fund. Nick Ferlsey is the Director of World Pensions Council. Duncan Bonifield is the Chief Executive of the International Forum of Sovereign Wealth Funds. And Solomon Asamoah, he's the man on the ground that makes it all tick in Ghana when it comes to the infrastructure fund. So a great gathering. Thank you very much for being with me, everybody. Angela, you stayed up late, you stayed up early. I don't know what your time zone is, but you're a lady that has traveled to Africa, deployed the capital, jumped the hurdles. So tell our audience what the biggest challenge was in getting that money over the line and committed to Africa.
Well, I think the largest challenge for us was, and there were many obstacles and many challenges, but the biggest challenge was really the perception of risk. We really had to introduce our decision makers and our board of trustees to Africa and shift them away from the thought that Africa is one country to really the realization that Africa consists of 54 countries with different economies, politics, country-specific risk and opportunities, customs and norms and languages and dynamics that constantly change across the countries. We also had to educate African investment managers on the logistics of doing business with U.S. pension plans and some of our restrictions and policies. It literally took 3 years of research and due diligence and 3 visits to Africa for 2 modest investments. All things kind of came together at a critical time, and we were presented with a small window to invest in Africa.
Okay, so 3 years, a lot of hard work, couple of trips, fewer miles. Duncan, there is a platform, there's a vehicle for anybody that's tuning in and they encounter these kind of challenges that Angela's had. It's about centralized co-investment platform, and that's the turnkey solution, isn't it? Tell us a little bit about that, and how do our viewers access that?
Yeah, thanks for that. And what that is about is really, and we've heard from earlier from some people, it's about, if you like, pre-qualifying projects so that they're much more easily investable. I mean, just think of what Angela's had to go through. She said herself, 3 years, big education for 2 relatively small investments. So what the aim of the co-investment platform is that we get a number of projects pre-qualified. They're, as we've heard from already, they're ones that are bankable. They've got co-investment partners, people who are actually investing, putting skin in the game. And that makes them much more accessible to to institutional investors initially, but ultimately, you'll be able to, via funds, you'll be able to invest in Africa. And the attraction, there's a couple of attractions there. We heard from Ayman Solomon of Egypt just on the last panel, just about that infrastructure investment, its risk profile second only to sovereign debt because of that guarantee. And of course, it's linked to consumers who have a very good track record right across Africa in paying their bills. So it's a very dependable source of cash. So infrastructure is potentially an excellent investment, and this just brings it that much closer to sort of everyday investors, if you like.
So let's just take that to Solomon, because Solomon, you run the Ghanaian money on the ground. You say one of the most important things is to speak to people like Angela and go, this is not a waste of your time. I've got a one-stop shop for you, and I can wrap it and pack it. What is the most important thing when you are pitching outwardly from Ghana to get people like Angela to put money into you?
Absolutely, and thank you very much, and thank you for the invitation. The important thing from we're concerned is to make sure that the projects that we have put together are projects that meet the criteria of investors like Angela or financiers overseas. Many of us working at the GIF have worked on the other side. We've been on the other side. We know what things we need to look for. We know how things need to be structured. The job of of GIF, the Ghanaian Infrastructure Investment Fund, is to package those things to meet those criteria. That way we save their time and we move these. Doing that in a relatively short space of time, we've invested in 12 projects across 7 sectors in Ghana in the infrastructure space. And for every $1 that we've invested, we've managed to bring in $10 of other people's money. So if you want to work with people on the ground who have a proven track record, I think that's the best way to get more projects financed.
Nick, I mean, there's 2 words that are pervasive, I think, and we'll touch on these, which is about de-risking the investments. In other words, making people like Angela and her board a little bit easier, breathe a little bit easier. It might be a gazillion miles away, Angela, but there's control over the money. Nick, let's bring it to you. Co-investing is ostensibly a de-risk proposition to people like Angela and the pension fund, isn't it?
Yes, I think co-investing is great because of the pooling of resources and also the pooling of risks, right? So you're basically putting together things, and the sum total of what you're putting together is better than the individual efforts. But to come back to what you said earlier, I think, and to what Angela said earlier, where I think she mentioned that she had to go there several times for these, mid-size or small-size private equity investments in Africa. And of course, she mentioned education, and I think it's a key word because maybe some of our viewers on Bloomberg Television aren't aware that, pension funds are strange animals, and the board of pension funds is very important. And if you neglect the board's opinion, you do it at your own peril, and it's essential to bring the board on board, no pun intended. And so the board members typically, and this is something that people disregard or ignore, that the world's biggest pools of money are U.S. pension funds and essentially U.S. public pension funds. So as I speak to you today, if you look at the sum total of the sort of, $40 trillion owned collectively or more by pension funds, worldwide, half of that really is owned by U.S. public pension funds, and there are mostly, teachers, school teachers, professors, civil servants, municipal workers, state workers, and they sit on the boards of these pension funds, and they're called trustees or board members. And the CIO may be a Harvard or Stanford guy with a PhD or smart person, I'm sure, but he needs to bring them on board. And the way they view things, the board members in their offices in, San Francisco or Chicago, is that they view the world as laymen, not necessarily as people who went to business school, because once again, they're teachers and municipal workers. And sadly, because of the media, not because of you, but because of the media in general, the perception of risk may be different from the reality of risk. And I think this is the starting point. Another thing I would like to really...
Let's hold that thought, Nick, because I want to bring that back to the deployer of capital. I want to bring it back to the lady that brought the board on board, so to speak. And what kind of return did you have to sort of justify to the board? How close was it? And what was the biggest question they asked you? Let's take it to you. You've done the deal. You've brought it across the line.
Well, originally, we knew at heart that it was a perfect fit for us. We're an underfunded pension fund seeking yield and returns. And, we were looking for, a competent, qualified African-based investment manager that was seeking capital. So we knew, that, first of all, we were going to be challenged with meeting our actuarial rates. So the needs were there, first of all. We knew, there were, numerous sector drivers, favorable demographics, growing urbanization, regional integration, and so forth. We just had to convince the board beyond that we had done the due diligence that we needed to do, We had looked at the stability of the organizations. We, had formed relationships with DFC and OPIC, or formerly OPIC, the World Bank and global investors, as well as some of the local pension plans like ESCOM, where we, had the validity of saying, we know that these two firms are going to do well. We, looked at the track records of deals and exits. We looked at the returns, and we compared the expected returns of U.S. private equity firms to the investments in the top companies and agribusiness and telecom and manufacturing. And we expected, with improved valuations, we expected to see, 2 to 3x multiples and 20 to 22% IRRs from the African-based managers. And we really wanted to really test out the strategy, so forth, with, two small managers that really would open the door to more investing later.
So this is very much about show and tell. What your actuarial rate is 7%, yes. But
yes.
you think that you can get in the 20s on an exit. Yes, this is more private equity based investment that you've gone for, is it?
Let me just pick up, Manus, if I may, a couple of points that Angela makes. So there is a cluster effect here. So Angela's, if you like, a pioneer in terms of this. But we asked about de-risking. The more that we can get international investors looking at these investments, then that will de-risk them further because you've got more people actually looking at them. And those are pathways that are getting into those investments that then become better trodden and make it easier for others to come in. So it's just, there's an important point here. There's Angela is a pioneer, but that is going to make it easier for others. And we can expect to see that coming up over time as this gets a better trodden route.
Oh, I just wanted to add on, as far as de-risking, we thought that, co-investing alongside of an already invested fund, where we could see, transparency into the existing investments, and also, investing in a U.S. dollar denominated fund would also help us. And looking at the structures and the jurisdictions that we were familiar with was another key to us really being able to get this over the hurdle. We also looked at how our interests were aligned with the two firms that we invested in.
Solomon, how important is that? Angela's just referred to that co-investing, that sense of ease, that, okay, you're going to build a port, you've got skin in the game. So to what extent did that play an integral part in bringing in, what is it, $1 for 10? It's a 1 to 10 ratio you're achieving at the moment in terms of inward capital. So to what extent, what Angela's just said, does that play into the Ghanaian story?
Absolutely critical. The fact that Ghana Infrastructure Investment Fund is taking the same risks as the co-financiers and the co-investors. The fact that if the project loses money, we lose money. And if the project makes money, we make money. And we don't have any get-out clauses in terms of the transactions. Gave a lot of comfort to potential investors. The other thing that gave them a lot of comfort is that our view of the world is very similar to their own. Even though we're government-owned, we are looking at things from an investment risk management perspective. And that's very important for co-investors and co-financiers. For example, we make sure that our projects are actually structured to international standards. We have a thorough due diligence. We actually outsource our due diligence to international standard, legal, engineering, technical, commercial funds, so that the end product we know meets the criteria that international investors are looking for. The additional thing that we have, which is kind of unique, is that you have the benefits of having a government-owned entity alongside you, but maybe without some of the bureaucracies that typically you find in government-owned entities. So we think you get the best of both worlds. You get access to government and decision makers to unblock impediments, but you also get a partner who views the investment world the same way you do. We think it's a powerful combination.
And Nick, you would be of the view that it's about tipping the balance within 2-3 major geographies, and that due diligence is critically important. The benchmarks that are used, for example, within the Ghanaian presentation and to people like Angela are critically important in shifting the narrative about invest in Africa, co-invest in Africa, aren't they?
Yeah, I think benchmarking and the benchmarks that are used are really essential. And if I had just one point to make today, it would be to reply to that question about benchmark, because they are ingrained biases in the way we invest. And when I say we, it's not only pension funds or sovereign funds. All investors the world over are biased. It's not their fault. It's because they rely on these benchmarks. And it's an oligopoly. So essentially, you have 2 or 3 companies, and as they're mostly Anglo-American companies, and the biggest one is MSCI, and they control that market for benchmarks. And 99.9% of the pension funds and sovereign fund and insurance companies the world over, they use these off-the-shelf benchmarks. And so the most commonly used benchmark worldwide, be you French, American, Canadian, Egyptian, it doesn't matter, is the MSCI, All Equity Index. Mm-hmm. And it's very interesting to look at that because it guides the way and it constrains the way pension funds put their money the world over, across geographies and across asset classes. And so if you look at that MSCI World Index, it will tell you that you have, on average, to allocate 55% of your assets, and more particularly of your listed liquid assets, to US equities and 10% to Japan, etc., because it's a reflection of the market cap of listed capital. And if you look at the size of the US economy today, it's roughly 21% of the world economy. And if you look at things in real terms, in purchasing power parity, the US economy is only 14% of the world economy today, whereas the index and the consultants, and the financial advisors are telling you have to put 55% into US equity. So flip side of that, Africa today is really interesting for a pension fund because of the long-term macroeconomic growth potential. So really, if you take a long-term view, and sovereign funds, pension funds are long-term investors, the growth story, people are buying into African assets because they're impressed about the economic growth. Today, Africa is like 5% of the world economy in terms of, in real terms. And if you look at the indices, Africa is less than 1% of these global off-the-shelf indices. And so basically the beauty of private equity and infrastructure is it allows you to leapfrog and go above the index. So if you are in Chicago or Toronto or Paris, and if you want to buy into African assets, the fact that you go straight to private equity or infrastructure is also a way to get rid of the biases that are in the index, the listed equity index, that go against Africa, if you see what I mean.
Breaking the trend there. I'll remember that the next time I catch up with the MSCI CEO when he passes through my region. I'm sure you'd love to hear that. Now, look, we're getting a couple of questions through. So what we're going to do is we're going to try and pepper through them. So short, punchy answers, and we'll try and get through. This is an interactive session, so please pop in on the box on the left-hand side. We did all touch on ESG when we were convening this panel. So let me just encapsulate the question, which is, to what extent does ESG play a factor in any of your investment decisions? So let's take it to the deployer of capital. Angela, to you first of all. I mean, you ticked a lot of boxes with this, didn't you?
Yeah. So for ESG, we really concentrate on the S part of it and having a more diverse group of managers. Right now, Chicago Teachers has 46% of their assets managed by minorities, women, and persons with disabilities. And that's about $4.9 billion. So when we look to Africa, we wanted to really leverage that and transition that thought process over into Africa. So we hired a woman-owned firm. And in that Africa-based firm, there are many managers that that invest in Africa, but we wanted an African-based manager based out of Senegal, boots on the ground, knows the customs, knows the cultures, knows the politics, knows how to invest there. And those are some of the things that we thought about when going over over the border to invest in Africa. We wanted to kind of, leverage the thought of diverse managers and inclusion. And that was our way of, extending our ESG principles.
So Solomon, then the logical question is to bring it back to you. To what extent do you proffer ESG within the dynamic of the projects that you put out there when you look for capital? How important is that to the investors that you speak to around the world?
That has become extremely important, and subsequently, it's extremely important for us as a government of Ghana owned entity looking to attract long-term financing. Long-term financing for Africa is often coming from development finance institutions and donors, and it's incredibly important to them. So it's very important to us. Also, we don't want to get involved in projects that do harm to our communities, ultimately. We want to make sure that they're environmentally sound and they are sustainable and climate friendly. To the extent that we have actually been able to access some donor funding to improve our capacity and our ability to deliver environmentally sustainable projects on the ground. And so it's a very important central theme, and actually it's a differentiator for us from other potential investors on the ground. It's extremely important, and for the right reasons.
Duncan, can I bring it back to you, which is, for example, I'm just going to read this out, which is, forgive me, I'm scrolling up. So, for example, we have somebody that works at BNP Paribas Asset Management. How can I contribute my expertise to the African investment narrative? Don't know whether I can distribute the name, but that's the question. But herein lies the point. How can I contribute my expertise to this narrative? But if there's people tuning into this now, just run us through how much easier it is to access Africa, Pan-Africa now than it was maybe 5 years ago, and where we are on that journey in terms of access and the narrative.
Yeah, I think it's hugely easier to do that. I think there's two things that have happened. There's one, we've had the pioneers such as Angela on an individual basis, and then we've had a trend across Africa for funds such as Solomon's in Ghana, but we've heard from Senegal and Nigeria and Egypt earlier. So these are sovereign funds that invest in their own country. They put, as we've heard from Solomon, they put money, they put skin in the game. They've got that investment, but they also look to crowd in additional extra capital into those investments, and that they are ready to go projects. So, there's been a real movement there. And then the third element, and which is what as a group we're part of, is bringing together a number of projects on this under this 5% banner and the Agenda 2063 banner, which is related to the Sustainable Development Goals, to create a platform that gives these infrastructure projects that are ready to go. So for your viewer from BNP Paribas, I'd say get in touch. You can get in touch with any of us, but Hubert as a first port of call, and to find out more about that and how you can make a contribution. But those access points have become many, many more, and so it's it's on a massive scale, both the quantum of investment, but also the ease and accessibility.
Solomon, the one thing I want to talk about, there's a couple of things we want to touch on. One is de-risking, and two is about the structures that you've put in place. Solomon, I want to get a sense of when you go out and market and look for funds. It's about peer-to-peer investing, but it's about what you offer them. It's about independence of the board. It's almost a mirror image of what they get, as it were, for Angela if she's looking at something in the United States of America. So just give us a sense of the kind of things that are requested as jumping off points that are now standard in the proposition from a country like Ghana.
Yeah, and I think the first thing is our governance structure. We have a very interesting and unique governance structure for a government-owned entity, in that our board does not have any government officials on it. We have an independent board made of private sector people, so our investment decisions are delegated to the board. However, we do have an advisory committee, which is chaired by the Ministry of Finance, and the governor of the central bank is also on the advisory committee. So they provide strategic direction to the institution, and through them we can make sure we are aligned with the government priorities of the day which is extremely important when you're trying to do infrastructure projects. So that's a very important thing that people want to hear. How do we make our decisions, and how can they be sure that the decisions that we make are good decisions to be made? The second one, which I touched upon earlier, was a thorough due diligence, which I think is extremely important. And then the third one, which I would say, is that we have been quietly building up a track record. As I say to people, to have done 12 projects in, 3.5 years, shows that we know how to navigate the environment, the local environment. And I think that's also a critical thing. It's difficult for outside investors in particular to really land and know exactly all the different dynamics. We've got that covered for you. Come and work with us, come and invest with us, come and invest through us. We've got all of that covered, and you can be sure that the investments that we do are the investments that meet your criteria as well.
Angela, how important is the board independence to you? Because I know part of when we talk about de-risking, it is about understanding, for example, the government of Ghana has got dollars in the game, makes you more comfortable. But when it comes to that board, the running of these projects, what's important for you?
Well, absolutely. Some of the things that Solomon has talked about would give us assurance. And, you know, our board and the decision makers are key. I wanted to touch on a little bit of what Nick said about the benchmarks and our board, but a key person or a key entity in our decision making is also consultants. And I think that's been kind of left out. That is a group that needs to also be convinced, and we need to have the buy-in for our investment consultants, not so much Chicago teachers, but most pension funds rely on consultants to, you know, make decisions and make recommendations, investment recommendations, and they have to be involved in some sort of this discussion, this decision. You know, I can say, yes, I want to invest in Ghana, and our board will, you know, think, yes, you know, she's done the due diligence and it looks like a good offer, and that consultant can give another perspective that will, you know, put us right back at zero. So I think that's one thing we haven't discussed that really needs to be addressed as well.
Angela, I wish that we could. We are at one of those moments. It's a bit like when the consultants come in, Angela, they say, your time is up, we're about to review the project. We're out of time, guys, but that it's okay. That gives us food for thought. And the whole point about it is that we're starting these conversations, and we're having these conversations with very credible investors such as yourself, Angela, with people who put together the risk framework and access through yourself, Duncan, the ability to see the platform and to understand from Ghana, Solomon, what is on offer. How many projects have you got to go? Quickly, Solomon, before we go, this is your last marketing call. This is your rallying call for Ghana. What have you got? We have done 12 projects. We've got 20 new projects in our pipeline. So there's lots of investment money that we could use. Angela could be on the phone a little bit later on. Nick, thank you very much. It's all about it's all about changing the narrative. I'd like to thank you all. You've been great, candid conversations. It's the beginning of a framework. I'd like to certainly thank Hubert for convening us all. It's been a great opportunity for me. I'm based in Dubai. We are EMEA. That does include the whole of Africa. There's a shock. And I often speak to many people from across the continent as opposed to a part of the continent. Without any further ado, I'm going to thank each of you. Angela Miller-May, Chief Investment Officer at the Chicago Teachers Pension Fund. Nick Filzi, I haven't done that very well, Nick, have I? Filzi, Director General of the World Pensions Council. Duncan Bonifield, Chief Executive of the International Forum of Sovereign Wealth. And Solomon Asamoah, our guest from Ghana. Ladies, gentlemen, our global audience, your opportunities are there. They are in Egypt, in solar. They are in Nigeria, in agriculture, power and gas. To Kenya, it is about the support, the infrastructure support for agriculture and affordable housing. And do you have the largest solar farm in Egypt? I don't know. Abu Dhabi might have something to say about that, but I shan't challenge you. I'll take you at your word. I love Egypt. I love Cairo, and I love to visit. I am available for all visits. Ladies, gentlemen, wherever you are in the world, this is one of those moments where you get to convene a thought process about Africa, how to do it, where to put your dollars, where to put your rand, where to put your Egyptian pound. You can, of course, take on the FX risk. You can take on the infrastructure opportunity. We leave you with those closing thoughts. The members of the panel would like to thank you for your time. From Bloomberg in Dubai, I'm Menace Cranny. Thank you for joining us.
Doing business in Africa. You can't afford to be without Africa Investor.